Cautious words from Jackson Hole. Hey, it's Eric Osnes here with ericismybanker.com and CMG Home Loans with my weekly update on mortgage rates and the economy for the week ending August 25th, 2023. All eyes in the financial world were on Fed Chairman Jerome Powell this week when he spoke Friday morning at Jackson Hole, Wyoming's Economic Summit. This is an annual event where the central bankers from around the world gather to decide what they're going to do with interest rates in their respective countries. Powell, aware that the FOMC, the Federal Open Market Committee, will not meet for another month, was cautious in his comments. Although still hawkish, he admitted that inflation is indeed waning in almost every category, but that he's still concerned about the tight labor market. Bonds were ready for a sell-off, which would have pushed mortgage rates higher. But Powell's comments appear to have been enough to keep things calm, at least for the time being. Traders are now forecasting an 80% probability that the Fed will pause hiking rates at their next FOMC meeting, which happens on September 20th. So far this week, mortgage rates are higher, but they're at least starting to stabilize. Here are the national averages. Conventional 30-year fixed rates, 7.39%. That's up 0.35% for the month. 15-year fixed rates, 6.77%. That's up 0.37 for the month. 30-year fixed rate FHA and VA loans, 7%, up 0.36 for the month. Jumbo 30-year fixed rates, 7.36%. That's up 0.34% for the month. Moving on. Are you asset heavy but income light? We have a program for you. I've met with a client this week who was turned down by his longtime bank because although he had over $1 million in assets in his investment accounts, he didn't have enough regular income to qualify for the mortgage that he wanted. I'm glad he called me because we do have a good solution for this. It's called an asset depletion loan. We have programs where we can calculate qualifying income based on retirement or investment assets. So this is a common situation that comes up, especially for home buyers who have recently retired. They no longer have a salary from employment, only Social Security and maybe a pension or a few other things, but they have a lifetime of savings in retirement and investment accounts. The program is not limited, though, just to borrowers who have retired. It's available to anybody. Many of our clients are not yet retired, but they have accumulated substantial savings and have benefited from this program. It also works extremely well for a client trying to buy a new home before they've sold their old one and having to qualify carrying mortgages on both properties. To calculate the income, we look at allowable assets, and we've got a table for that, divided by 120, and that becomes a qualifying source of income. For example, if a borrower had $1 million in allowable assets, that would give us $8,333 a month in qualifying income that we can use. That's $1 million divided by 120. This, plus any other income sources the borrower have, can be used for our approval. This can be a real game changer for someone who is asset heavy but income light. Give me a call and we can check on your situation and see if this is something that you might benefit from. You can call me 206-915-3742. You can email me eric@ericismybanker.com or look for me on social media. Just look for Eric is my banker and you'll find me. That's all I've got for this week. I'll talk to you next week. Have a great weekend. Reach out if I can answer any of your financial related questions.